Hi everyone, Mike here. Today I wanted to lay out a video that was easy to understand, that was not contentious, that not too many people could argue with. Let me just share with you a little bit about my credentials and why I know that this is good material. I've been in financial services for about 10 years. I've helped numerous clients along the way from all walks of life, people who are very wealthy and people who are literally living paycheck to paycheck. And as I know, this year has been really rough on a lot of people, with the coronavirus putting 40 million people out of work. And I don't know how many people are actually going back, but hopefully you didn't deplete your savings. But I do want to talk about putting more cash in your pocket. That's what we're going to record today, how to actually increase your cash flow without getting a second job, without actually having to beg your boss for overtime, because I know that some people aren't even allowed to get that overtime. So as a financial professional, I am held to certain standards, certain things I can say and I can't say. I do want to make a disclosure that I am not a tax professional, but as I go over this information, feel free to consult any of your tax professionals as you want, but there's some good information here I wanted to share with you. So there's 14 different ways to actually increase your cash flow. The first one is this tax return. Now, I know that traditionally tax return day is on April 15th, but because of the government restrictions, they have extended it to July 15th. So if you're like me and you're waiting to the very last day to do your taxes, then at least you have about a month to do it. I wanted to talk about the tax refund that you actually get. Most people think that getting a tax refund is a good deal. They might get a couple $1,000s sometime in April. And they're usually excited about that. And the first thing that I've seen people do with that money is they go out and they spend it. They go out and they spend it on a new TV, or they get some kind of new appliance, or they go on vacation or something like that. And I'm here to say that that's probably the worst thing you can do. See, when you get a tax return, that's not such a good deal. That's literally telling the government that you want them to take as much as they possibly can from your tax return the whole year, and then they promise to give you whatever they haven't used at the end of the year. And I don't know anybody who's ever given $1,000 or a couple $1,000s. I've seen tax returns up to $5,000 and $6,000. I don't know anybody who would give $5,000 or $6,000 to somebody without even expecting a thank you in return, let alone having any kind of interest in that loan. Because you know, when you're giving extra money to Uncle Sam, our least favorite relative, they're not giving you a refund with any interest on there. They're not saying thank you for that money. They're just taking it from you and they're giving it back whenever they want, according to whatever calculations are on a tax return. So again, I do advise you to go talk to your tax accountant when I give you this information. But the truth about having a tax return is if you actually would amortize that whole tax return over the whole year, it'd be better off in your pocket than in Uncle Sam's. So for every $600 that you actually get back on your tax return, literally you can adjust your tax withholdings on your W-4 by one number. Most people claim 0 or they claim 1 or 2 based on how many people they have in your family. But that number has nothing to do with actually how many dependents you have. It's a calculation based on all kinds of parameters, and your HR person won't even tell you what those parameters are. So you can look into this if you want, but the tax withholdings, every number that you adjust it by, literally put about $40 to $50 into your paycheck every single month. So again, over the course of the year, 12 months, that's going to be about $600. So if you're getting $600 back, or you're getting $1,200 back, or $1,800 back, you can literally adjust those numbers by that many, 0, 1, 2, or 3, and then get that actually in your paycheck over the whole year. There is something actually called the 90% rule. 90% rule says that if you pay 100% of your taxes that you were supposed to pay last year, or 90% of your expected tax burden this year, then the government won't penalize you for underwithholding. Right? So again, talk to your tax professional about adjusting your withholdings, but take that money every single month and then put it away. Don't spend your tax return on a new car, on a new TV, or vacation. Take that money and put it into a place that actually earn interest. That's just one of the ways you can actually increase your cash flow. There are some other things. People who don't own houses, this won't apply to them directly, but if you do have mortgage insurance, once again, talk to your bank, talk to your mortgage professional, But things like the PMI, the private mortgage insurance, right? You literally, when your home reaches 20 to 25% of equity, you no longer are required to actually have that PMI. You can drop that, and you can actually save way more money on your actual bill every single month. Another trick is to actually escrow your own account. So everybody has property taxes, right? And we have the insurance and stuff like that. If you're actually escrowing your account, instead of having them take it from your mortgage payment, you can take that extra money every 6 months, put it into an account that'll earn some kind of interest, and that'll generate a little extra cash flow available to you for that period of time. The fourth thing you can actually do to increase your cash flow, hopefully you don't have a lot of credit cards. Hopefully you know what you're spending on those credit cards. But as we know with the credit cards, you have a lengthy sheet of paper that has all the different disclosures and disclaimers on that credit card, and half the time they won't even tell you. But one of the things you want to look for is what's called credit life insurance. You don't need life insurance on your debt. Credit cards will actually put that on your credit card statement because in the case that you were to pass away, they want their debt paid still. But if you're concerned about leaving that to your estate, then you can do that through estate planning or through insurance. Get rid of credit life insurance. Get rid of any kind of identity theft protection on your credit card. It's just a waste of money, and they are charging you interest for it. The fifth thing you can do to actually increase your cash flow is to raise your deductible on your auto insurance and your home insurance. Once again, it just depends on how good of a driver you are. If you haven't gotten speeding tickets or haven't gotten pulled over or gotten into car accidents, most people I know have about $500 deductible. What that means is if you do get into an accident, the insurance company is going to expect you to actually pay $500 out of your pocket in order to start the process before they'll give you any claim money. So if you have a good driving record, you can actually raise that deductible from $500 to $1,000. That'll decrease your insurance policy premium roughly 25 to 30%. So you take that money, that 25-30%, you put that into an interest-bearing account, it'll actually give you some extra cash flow, right? Once again, you need to talk to your insurance company about that, and it will work if you have a good driving record. Number 6 is replace expensive life insurance with more appropriate policies. I do advise you to talk to an insurance professional. There are lots of people out there who are just going online to buy their insurance. Most people have no idea what insurance is. They don't understand the difference between accidental death and dismemberment insurance, life insurance, whole life insurance, universal. There's all kinds of different insurance policies. Make sure that you have the appropriate policy for what you want to do. I'm not here going to talk about all the different kinds of policies, but talk to your professional advisor who knows about insurance, and don't pay for more insurance than you actually need. Right? Use that extra money for your advantage. The 6th thing you can do is actually owning a business. Now, in my opinion, I think everybody should own a business. I think that having a W-2 and being an employee severely limits you in many different ways. One of the reasons why the government can take your tax money is because you actually have this thing on a W-4 that they say how much money they're going to take from you, right? If you're actually owning a business, you're entitled to all kinds of deductions. Here's something I learned about deductions too. So if you're familiar with Robert Kiyosaki, he wrote the book Rich Dad, Poor Dad. And he has a whole team of professionals that talk about the wealth principles. And he's got a book that talks about tax-free wealth. The author of the book, I can't remember his name right now, but he said that the United States tax code is literally about 2,000 pages long. And out of those 2,000 pages, 50 of those pages will talk about how to actually pay taxes, what you're taxed on. And 1,950 of those pages are all about ways of actually legally having tax deductions, whether it's through real estate, whether it's through business, whether it's through other kinds of deductions. But literally having a business, you can have deductible expenses like your car, your mileage, right? Any expenses that you have, whether you have office expenses, whether you have business trips, whether you have anything like your computer, your cell phone that you use for work, all those things are legal deductions. And if you're paying less in taxes, then obviously, then you're going to have more money in your pockets, right? The other thing you can do to actually increase your cash flow is have a qualified plan, right? When it comes to taxation, there's tax now category, meaning that account will be taxed every single year when it grows, right? There's a tax later qualified plan, which means it's like a 401k and IRA. You're not paying taxes on it now, but you're putting money away for savings, and as that account grows, it's going to continue to grow. Hopefully you're getting some kind of compound interest on there, but you're not taxed while it is. You do need to understand the difference between a traditional IRA and a Roth IRA. Basically, it's tax now, tax later, or tax advantaged. So if you understand those kind of plans, then knowing that you're not throwing all your money away to taxes will certainly help you put more cash in your pocket. Another thing to do is to reposition low interest savings. The thing about banks is that they don't give you any interest. They used to have these savings accounts that would give you 2, 3, 4%. I haven't seen any of those for a long time, right? There are places where you can put money in. A lot of the electronic apps that you can use will actually give you some kind of interest. Get away from anything that has 0% interest. Look, here's the thing. Inflation will eat away the purchasing power of your money at a rate of about 2 to 4% every single year. And if you're not actually getting 2 to 4% on your savings, then you're not saving any money. Your purchasing power is being decreased and you're not doing anything. So if you're getting interest, then that's another way to increase your cash flow. Here's what I really like. Number 10, what can you eliminate, right? People still have landlines. People still have subscriptions to things they don't go to. Are you still paying for the gym? Did the gym close and you can't even go anymore? Right? What other things are you actually paying for? How closely are you watching your budget? Right? And so make sure that you're budgeting and you're getting rid of those expenses. I know with these new smart TVs, there are lots of different apps like Netflix, and there's Disney, and there's Amazon, and all these different subscriptions will add up. So if you're not taking advantage of them, then get rid of them. Put more cash in your pocket. Here's a good one, number 11. Don't pay bills too late and don't pay too early, right? So the average American spends anywhere between $300 and $500 on non-sufficient funds fees that the banks charge for overdrafting your account. Right? I know if you're living paycheck to paycheck, it's really hard to budget, but try to avoid these non-sufficient funds, these NFS fees, as much as possible. Because what happens is these things will just continue to spiral out of control and your money will evaporate. Right? On the flip side, you don't want to pay bills too early, right? If you have cash in your pocket, especially if you're in a tight budget, make sure that you understand the day that they're due. Don't pay them too late so you have late fee payments, but don't pay too early. If your bill is due on the 21st of the month, don't pay it on the 5th. You have 2 weeks literally to use that money for your advantage to maybe earn some interest if you are, and then you can actually spend the money in useful places. Can I get lower interest rates? Number 12, right? You should be negotiating with your creditors. In my opinion, you shouldn't have any credit cards. But if you do, you'll notice that they have 18%, 21%. I've seen 29%. Try to get those down because the rule of compound interest says that your money is going to double or your debt is going to double every so many days based on what your interest rate is, right? I'm not going to go over the rule of 72 now, but make sure that you negotiate with your creditors. Try to stay out of debt as much as possible. If you have to consolidate your credit cards, then go ahead and do that. But don't pay too high of interest rates. I like number 13. Sell unneeded assets and invest, right? I live by the 2-year rule. Human beings have a tendency to collect just a bunch of stuff. Now, we all want toys, we all want games, we all want things that we like to do. But if you don't play with it, if you don't look at it, and it's not some kind of antique or collectible, then get rid of it. Have a garage sale, go on Craigslist, go on letitgo.com. There's all kinds of websites. One man's trash is another man's treasure, right? You don't need to be collecting this kind of stuff. And if you're strapped for cash, then get rid of some of the stuff that's just sitting around that has value, right? And the last thing I can say to increase your cash flow is to actually do some couponing, right? There used to be a show on TV called Extreme Couponing, and you could literally spend $300 on food and get it for $125 or get it for $50. I'm not suggesting that you have a hoarded amount of food or staples in your house, but there are many different ways of actually couponing. If you want to spend some time doing that, you can save a lot of money. There are some websites that you can go to: moneysavingsmom.com, coupongeek.net. Jill Cadaldo is a good one. Do some couponing. There's lots of different ways you can actually increase your cash flow. And unfortunately, too many people are living paycheck to paycheck. I hope this helps you put some more cash in your pocket. I really would love to be able to show you more information about how to actually increase your cash flow. Don't let your bad habits put you in a bad financial situation, right? Take some time to look at your budget, create a budget, and put more cash in your pocket. I guarantee you'll be a lot happier. That's all I got. Have a good day.